Welcome to the webinar. You have entered as an organizer and may now speak to any other organizers or panelists on the line. When you are ready to begin the presentation, press the Start Broadcast button on the GoToWebinar control panel to allow all attendees to hear you. This system will notify you once you begin your broadcast.
Nope. Hello, hello. How's everybody doing today? I didn't put any ads up. Promoting tonight. I usually put up something just as a reminder. Alright, good. So how's everybody doing? Trying to get my eyeballs refocused here. Check, check. We all okay? Hello, 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 hello. I'm coming across right. Y'all hear me? Hello. Check, check. Check, check. Hello. Hello. Well, my microphone says it's broadcasting. Okay. Hello. 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 No. Okay. Okay. Test, test. Microphone's on. I've got green bars. Sound check. Check, 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 check. Check, check. Okay. Sound. Adjust system volume. Hello. Hello. Oh, shit.
The broadcast is now starting. All attendees are in listen-only mode.
Now you can hear me, huh? Okay. So in admin mode, it works just like broadcast mode, except it's not broadcasting. So the green bars show up and everything else. I just forgot to turn the broadcaster on. My bad. Sorry about that. I don't know why you were able to see, but not hear. But at least we got it working now. My bad. How's everybody doing today? Sorry about that, Zoe. Okay. I'm pretty tired, but it's, 3:30, 4 o'clock? That's how I went to bed last night. All right. So good, good, good. Could be worse. Could have two crazy toddlers. Oh, well. It could be worse, Michelle. You can have two adult children and two teenage children. So, well, two 20-somethings. One teenage, one 20. Whatever. I told you all the story about some people have been around me for a while. You know, when I first had my oldest daughter, and she was about 8 weeks old, and I took her into my office to show her off. And I remember one of the engineers, senior engineers, we were leaving, and, you know, she was all fussy, wah, wah, wah. And he goes, and I'm like, April, you know, and his name was Louis Guy. I'll never forget Louis. And he goes, oh, that's such a beautiful sound. And I'm like, what are you talking about, beautiful sound? She's like, wah, wah, wah. And he goes, well, it's better than what my daughter says. And I go, what's that? And he goes, get off my case, Dad. So, see, it's all perspective. It's all perspective. He had a teenager, and I had a 1-year-old, or an 8-month-old, 8-week-old. And so, yeah, it's all how you frame it. Exactly. Having a husband can be like having a 2-year-old, 3-year-old triplets. That's funny. Yeah. Yeah, it does give me some verbiage to date me, huh? But I'll never forget that. So the Forex world. I'm gathering some sleep. Sorry. I'm gathering some thoughts for this week's Mindset Mastery. I told Dallas, I'm a little bit like, I saw a special on Joel Osteen one time, and the interviewer was asking him, he says, "You're just such a great orator, and your talks have such depth and meaning, and and so he just went through, he said essentially Sunday after I deliver, my sermon, my talk, whatever you want to call it, I'm already working on next Sundays, right? And then it went through his Monday, Tuesday, Wednesday, Thursday, Friday, and he generally has it done by Wednesday, and he's rehearsing it Wednesday afternoon, Thursday, Friday, Saturday for delivery on Sunday. And I was telling Dallas last night, I said, these mindset mastery things, I don't just get on the microphone and ad lib. I start the week before and I look for what's happening, what I observe with traders, any longer term issues, and try and top macro level, start looking at what's there, and then take notes, and I'll have 2 or 3 columns, and then by the time I get to Tuesday or so, it's moved to a whiteboard, and then I'm kind of just which one evolves the most over the next few days is the one I end up going with. And yeah, good pastor. So anyway, we visited Bitcoin yesterday for a few minutes, and just want to bring you up to date on this fork that we drew. Okay, we had some good connections, that we saw a nice big long stab there, and here, right? Oh my lordy, that bottom one. There's my mouse. I'll get this a little sharpen my pencil a little. There we go. And then we have this big move up, and then look at this move right here. Not only the top of the fork, like a pack move at a higher time frame, but one of the support and resistance lines from the AI and the software. Yeah, it is a good long wick, isn't it? And then, of course, what we said is, don't ever, just because price already leaves the fork, look how far it is downstream from that point, all of that outside the fork, and look where it bounces. Fork Fibbo. That is the right in my Fork Fibbo template. Yeah, there were 3 lines in that general area. They were up here. But that was the first one. To the pip, literally. I mean. So this is why forks are so cool. A lot of people are like, pitchforks. And yet, there you have it. It's the greatest stuff. So a couple things I want to talk about today, and then I'll just open it up for questions, whatever you guys want to talk about. It likes to be, there we go, just being finicky with me. Just a couple of reminders on things. There's, good opportunity for stuff in terms of when you're trying to get my chart on another machine to cooperate a little better. There we go. Move this one over for a sec. Just to review a few things. Now, I don't have my Bollingers on here. I'm going to have Clay do a presentation for this group. Yeah, I'm sorry, Michelle. It's just, I can't stop. And we'll talk about the Clay way here a little. But always looking for trend lines, trend line touches. Because when you have a downward move like this, remember, we can trail this. I guess I use the chart instead of the. Got 2 pip channels as is. I can expand it, but it's going to get awfully tight if I do, so I don't want to show that right now. But you can look at scale and say, well, grid line here is 2 pips. Do I really need more than 2 pips as an MSL? I just want to get y'all's opinion on that. Oh, there's too much. I don't know if you'd see the dotted line. There we go. That'll work. Now, I'm not going to put my risk into a 2 pip stop loss, but I'm just saying for my MSI, very often when it's that tight, I would go 2% into a 5 pip stop loss. Well, we're not going to be trading this time of day, but if you understand Elliott wave, well, I'll challenge anybody that thinks they do. Me too. But it's not so much Elliott wave here as it is just what you have going on in the charts. Now, okay. Telegram messages. Move it over here. With the Clayway, we use Bollinger Bands for the 5. And, Clay, why don't you count on next week? You can just go through your old slides and do that again for this group. Invite all your buddies on. We put Bollinger Bands on the indicator with special settings that we've learned over the years are ideal. And It allows us to understand where there are bends in the extremes, because the Bollingers act as a rolling extreme. And we talk about the 62 being a rolling Fibonacci, so we're going to use Bollingers inside the indicator as rolling extremes instead of the static 89 and 11. And so Clay we'll talk about some of that on Monday. But some of these trades or some of these moves are trades that you can stack. Well, now if you're Americans and you're using American brokers, good luck with that. But in terms of what you can do, now as an example here, see, this is a retrace extreme that's tradable. We got our it's a 5-minute convergence. So it's a 15-minute retrace extreme, but it's a 5-minute convergence. And so you can take that trade. And if you want to look and get a sense for the waveology of it all, what I want you to pay attention to is we had a 15-minute convergence here. So we have a 15-minute convergence, and now can use this because we actually have orange. My 15-minute wave is making its way down, and then it pulls back. Wow, if I could just trace like I was in first grade. Alright, so it comes up here. Doesn't come up all the way. And you can see that you're having a somewhat proportionate move of the 15-minute wave. It's pulled back. It's a retracement, but you can tell it's pulled back. I put a Fibo on that and probably see it's 61.8. And it hasn't come up to converge, so obviously we'd like to see a higher high unless it was divergence, not divergence. But the 5-minute wave goes to extreme. And the 1-minute wave hits it. And so that's a great trade because it's a 5-minute trade. Now, what you want to pay attention to is the pullbacks of that 5-minute wave as it's making its way down. And tab 29 gives you a little advantage. This is where it comes in handy, because you see this stuff up here was 30-minute tops. Alright, see the 30-minute wave works its way up, 15-minute wave brings the 30-minute wave up, and now it starts heading back down. So this movement of the 15-minute wave is literally cycling. We call it cycling the 30-minute wave down. So what's happening is the 15-minute wave comes down, retraces, comes down, retraces, comes down, retraces. Eventually we have the 30-minute convergence, somewhere down there. So when you see this is where tab 29 kind of says, look, I had a 30-minute top up here. Wow. It's not like I've been into the tequila yet. Off. Notice I said yet. Alright. So we have 30-minute top. And so from there, the 30-minute wave is working its way down. Because the 15-minute wave is cycling it. See it cycling it down. So once you see this 30-minute top and the 15-minute wave starts breaking away from it, we know this is a down move. Yeah, maybe I should have. Wow, got like 4 people saying the same thing. Alright, you're right. Let's call it quits. I'm going to go hit the tequila. So once you know it's heading down, this is when you can stack trades. Because you know, you don't have to have exact trend lines. Some of you get all hung up on this. It's actually not that bad. Okay. I was hoping it wasn't going to be a perfect fit like that, but whatever. So as long as you have a pullback, you know this was the high. You know, any of these down moves, you're really not expecting to come up any higher. Especially when you have this working for you. I'm going to use yellow here. Okay. So now I've got two lines, competing lines. I can clone that, make it a stop loss up here, and then we take an even sharper bend. Because what happens here with this trend line then is price doesn't come back up to meet it. Price falls short and it wants to drop more. So these are all good stack trades. And what do I mean by stack trade? What do I mean by a stack trade? Yeah, multiple entries that I'm not getting out of as I go trade to trade to trade to trade. Well, you can only, once your stop loss is to break even, this is where you want to be careful. You're not, you're going to go farther downstream here for your original stops to be break even, but you're not thinking of it in that term. Remember, your margin when you're trading, your margins operates independent of your stop loss. So you could be break even in a trade, but that doesn't free your margin up. If you're a U.S. trader and you put 2% into a trade, until that trade's closed, you're 2%. You got 2% of your trade, and the margin it takes to buy 2% is tied up in that trade until you close it in a win or a loss. It doesn't get released just because your stop loss is break even. So you hit that first point where, let's say you moved your stop loss to a break even. You only had enough margin in the States, depending on the broker. They're not that varied, but to maybe put in another 1.5%. Then you're cooked at 50 to 1. You don't have any more than that. You're done. You just can't stack trades. And stacking trades is one of the most profitable things you could do as a trader. It's one of the most psychological, easy things you can do. And it's one of the most profitable. Because you're not exiting, you're not doing a standard, I don't know what's going on here. This is why understanding waveology. This is why understanding this was a 30-minute top, and we're going to head down now. And we're looking to see how the lower level waves are cycling that down. So I could get in a trade, third hit on a trend line for sure, and I'm in this trade, and even when it pulls back here, I'm not threatened by it. And in fact, my Bollinger would tell me I could enter another trade, and unless it gets past my trend line and goes to my stop loss, I'm in that trade. So here's trade number 1. Here's trade number 2. But trade number 1 still going on. I started 2 here. And it comes up, and again, Bollinger up. There's nothing here enough to take a trade unless we see a Bollinger hit or it's a trend line hit. If I have a wick that comes up or within a pip or so. I mean, look, 2 pips the 2-pip channels, I mean, the distance that's missing it is about, 1/10 of a pip. I can see just a little bit of black between the candle and it. So that's a trade. So we'll call that our third trade. So here comes our third trade. Here comes our fourth trade. So third one's going to continue. First one's going to continue. Second one's going to continue. But here I enter another trade. And so you keep stacking these, and you're using the same stop loss from. You don't have to worry about getting into the, it's at break even, blah, blah, blah. No, just use your manual stop loss, and price finally breaks the trend and goes up, you're okay. But, if you understand these waves, again, a little bit more advantage of tab 29, not a sales pitch, but just saying, you can. Where would you exit on this? You keep drawing trend lines. You keep drawing trend lines. And what's going to happen is at some point you're going to end up with a trend line that's a little steeper because you're going to have some drop off as it continues to come down. Oh, I can't. I almost hit global erase. I don't want to do that. Let me just clean this part up. Now remember, you don't want to be buying into these. And these are very tight. Normally you don't spend too much time here, but they're going to get tighter, and they're going to get tighter, and at some point, really a little bit more on the left side there, at some point, it's either going to continue to drop down steeper, or it's going to break it and go up. And now you take out all your trades at the same spot. The angle of your trend line changes and it just accommodates where you are. But all your trades could stay in there because you keep coming lower. You don't have any, you don't go any higher. And so it just works for you. Well, I can't slide this screen because I've got markups on it. Now I can slide it, but so see, here would be your break, your stop, and you have, oh my lord, 1, 2, 3, 4, 5. Down here we had some little ones, 6, maybe 7, all the way down here. The last one might go out negative. The last one might go out break even to go all the way out to your stop loss line, your MSL. Big deal. I've got 6 or 7 trades, and the top one came all the way from there down. Now, generally, you look for bigger. I'd like these to be 5-pip channels instead of 2. Just kind of too small to trade, but that's not the point. The context of stacking a trade in a down move, and the reason you know it's a down move is because you can tell by the waves. This is where some people, and I I'm not judging anybody right here. I'm just speaking at a very macro level because I do believe anybody could change. But when you talk masses, that doesn't happen. So very literal, very OCD, very type A traders sometimes have a hard time because they can't see the big picture. They're so caught up into the micro of the move, they don't see the macro of what's going on. Now, again, that takes time. I'm not talking about anybody. Mackenzie. It'd be like those subliminal advertising, it's just like, now I'm not talking directly to anybody here. Mackenzie. Mackenzie, I love Mackenzie. She's such a good sport, and she's as dark and sarcastic with her humor as I am. So she puts up with me but she also gives it back to me. So I like that. So so sometimes people get too caught up in the micro that they can't see, the macro. And that area, which is now off to the top left, where the 30-minute wave was at its top, and it starts heading down. Good luck. Once you understand the wave is peaked and now it's coming down, you look for these pullbacks. And almost always, there are going to be trend lines. It might not be the next line. It might not be the next, in this case, high. It might be the one after it. But there's just going to be a series of trend lines, and you just keep redrawing them. Every high, you kind of draw a new trend line. And but you don't want to get too micro. You don't want to be two candles, and in 6 touches, in 6 candles, I have 3 touches, and I call that a trend line. That may bite you. Okay. But between waveology and trend lines and rolling extremes, I'm on a 1-minute chart here, so you could be on a 5-minute chart looking at this with the Bollinger Bands on your 5-minute wave, which Clay will show you on Monday. Well, I can't just magically make a fib happen, but I could look. I'm exiting here. I've erased my trend lines, but let me get my pen. I'm exiting here because it breaks my trend lines. And at that point, like I said, we had 1, 2, 3, 4, 5, right here, 6. These are in steep profit. This one probably breaks even or makes a pip or two. This one's going to lose. And it's okay that it loses. And I'm worried about it in a stacked trade. There's all sorts of, sometimes there's not trend lines in the channel, but sometimes you have trend lines in the indicator, and you trade those too. Especially when you've got, in this case, the 30 and the 15, even the 5, are all snaking. So you can come in here and draw trend lines. Wait. I can't cross fields. I have to stay inside the one field. Magenta. Yeah, it'll show up good. Alright, so let me come down here. And you can visibly see where they are. Oops. And, you know, these are like hand grenades and horseshoes. Oops. You want it to be as close as you can. Go here. But you can have a little slush. Not much, but you can have a little slush. That's tradable by me. And so forget the trend line up here in these cases. You know, you'd be able to take this third bump here, a little tiny bump up, just the tiniest bump. But all you need to do is get into another trade that's going down. And Tim points out over here, Mr. Tim Packus, you know, now we have, and again, more advanced trading. I don't take this to just anybody here. Oh, come on. You know, we've got some major, well, I guess I can play that differently. Hold on. Get rid of this other one. And let me just do this. I want to stay with the trend and its movement. There we go. Okay. So all sorts of cool stuff. You know, look, beginners, you know, coming off pitchforks, beginners coming off harmonic scans. You know, we're giving you a glimpse of the future. This is where your trading knowledge comes in. But it's what makes these moves like this so easy to trade and to stack. These are, like I'm telling you, these are the most profitable trades you can make. These, you know, these channels, when you stack them, you don't need tons. You know, if you get in here, let's come up here from some of these top ones. Yeah, it was a cycle. Hello. All the way through where it would have been stopped out. Okay, so trade number one, you know, 10 pips. Nope. There's trade number one. I erased all my lines, so it's 12 pips, trade number one. These are 2-pip channels. And we said, what, 10 pips, trade number two. Yep. Another trade. To our stop. 9.2. Come down here, way down low. $6.5, you know, and some of these dinky ones don't even, you know, like I said, they're not going to be anything because the stop loss is at or beyond them. That's, you break even or go negative because of spread slightly or whatever. So you start stacking these trades and you make 10 pips on one and 8 pips on one and 6 on another and 4 on another. Very little danger compared to normal trades. And, 10 and 8 and 6 and 4, 25 pips in the bank. I'm going to trade the trend line before I'd use the haul in a move like this on the 1 minute chart. Yeah, and yeah, thank you, Troy. 2% to a 5 pip stop loss. So 25 pips, that's 5 units at 2, 10%. Yep. And you think about minutes, hey, from about 2 o'clock to when we get stopped out, 1700, so, 5 hours of time. What? Yeah, you could do that all day, and you could find pairs to do that all day. And it's just why almost any chart you look at, people normally would look at that and go, oh, there's just my tab 29 traders that are, kind of halfway into it would look at that, there's nothing there. There's just nothing there. And I'm looking at it just drooling. Because even though it's a tight channel, if you know how to trade, know how to read the waves, you see you're at the top and now you're cycling down. Oh my gosh, Yes, that's a good way of saying it, Jake. Very, very good summary. Because you are aware that it's a 30-minute top in the macro sense, you can max out in micro setups the entire way down. That's all right. You get creep, crawl, walk, run. So you look, up front, you got to get the security of a 10-1 or a 15-1 convergence. But this is why, once you understand, this is why it's worth taking the deep dive and immersing yourself, scans, forks, fidos. When you get good at forks, you'll be instantly good at trend lines. That's just the way it is. Well, I don't think I would set alarms on a 1 minute chart. If I have trend lines on a 10-minute chart and my 1 and 2 trend line, my first and second hit on the trend line are an hour and a half apart, and I extend that trend line out, then that's a good one to put an alert on. But if I'm around the house, this is dedicated trading. This isn't, I would refrain from putting alerts on a 1 minute chart, on 1 minute moves. Same scale it up. This could be 30 minutes, this could be 4 hours, it's the same understanding. Maybe you have an 8-hour top and you're on a 30-minute chart watching the 8-hour wave being pulled down by the 30-minute wave. The 30-minute wave is going to cycle just like the 15-minute, I'm pointing, just like the 15-minute wave here cycles the 30-minute wave down, or the 5-minute wave cycles the 15 or 30-minute wave down. The 30-minute wave will cycle, an 8-hour wave down or a 4-hour wave down. This is why waveology is crucial. Understand what's happening, and you could get that understanding even on a 1 minute chart. This is pretty powerful in one indicator. Yeah, without waveology, you're trading the micro. You can only do the micro. But that's where you start out. So, to the people starting out, the people doing 10-1s, 15-1s, that's where you got to start out. your RIS will widen its scope as time moves on. Start and master one thing at a time. 10-1, 15-1. But waveology and these indicators are just very powerful in terms of being able to go to the chart and get pips. So somebody asked a question about Fibbo. I don't know if I can make that happen, but I'll try. I'll look at a few spots and see if we can find one until it doesn't work. And then so here's a good one right here. Simple enough. But I'm probably not going to see. Yeah, I will. So, I mean, it's not the best of examples, but this is what I'm talking about. So I have a retracement, and you go, well, geez, a small scale here like we are, I shouldn't be, I should be pretty smack on. I shouldn't be sitting here missing my 61.8. I went precisely from top to bottom. And yet you can look at that and say, okay, let's watch that circle. If I came down here with this Fibbo, instead of using it on the wick, I put it on the candle body. Not to cheat here. Go on. That's about as close as I'm going to get without measuring numbers. All of a sudden, I'm wicking into the 61.8. Now, what you would normally like to see is some reverse compliance, but you can see when it's there, in the future, you see other stuff happening. Look at this hit here, 14.6, boom. Blue wick, 23.6. Now, I wouldn't have those hit. Now, in terms of reverse compliance, some close. It's so small scale here because I'm only measuring, what are we doing here? About an 8 pip zone, 48 to not even 28. Yeah, 48.39. So about a 9 pip zone. So to have all your, it's just too tight. But that's an example of it. Where when you're on a wick, nothing, it's just the thing I'm measuring is too far off. Still a very tight zone, but now when I go candle body, nice hit here, and I saw one over here, so oh yeah, nice hit here. Nice hit. That's the grid line. It's not out right here. Couple nice hits. So, could be either one. Magic Fibbo is a different tool. Anyway, so it's easy to do when you draw a fork. Sometimes you could do that. Now, somebody, I'm sorry if you're here, I forgot. I'd have to go back to my email or messaging. You know, my original Forex course was, I don't even remember the specific name of it, but it was through Timothy Morge, and I remember I was a little like, because it was 75% stocks, about 15% commodities, and I don't even think we covered a Forex. And you know, Timothy Morge, being an old school guy, I was talking about some of his old school guys yesterday. He uses the bodies a lot of the time versus the wicks, and that stems from day trading and where price closes on the day. That carried into people looking for conditions based on candle close. That all comes from day trading. Day trading meaning trading daily candles. And there's, you know, they're just an older section of the old paradigm where they're more interested in opens and closes than they are highs and lows. Now he's one of those guys because that's where he grew up, was drawing, you know, pitchforks on daily charts. It's only in, you know, as time went on that he started looking at intraday. Crypto's not just another market. You could put it on gold, you could do anything. Yeah, it was actually a projection, not a retracement. It was an inside projection. So, yeah, so you draw a fork, and if it's, you know, you're not quite getting the touches you'd like, especially on a traditional, just move one of the swings and you'll know which one by playing with it. Move it to the candle body instead of the wick. And if it magically creates touches, then that's just where I'd leave it. And then you come back to the philosophers who want to give you a hard time because, well, you're not a purist, you know. And we go all the way back to the, do you want to be happy or do you want to be right? See, the purists want to be right. I want to be happy. You know what happy is as a trader? Pips in the bank. Pips in the bank. I've had, you know, students of fellow students that were in that original class with me with Timothy Morge, and, you know, we talk up sometimes and exchange stuff, and it's like, oh, Steve, you can't do that because of this, and you can't, you know, best fit. There is no such thing as a pitchfork. That's a Steve Greger thing. So these other guys won't draw it because Timothy Morge didn't teach it to them. And yet, I mean, how many trades do we make off best fit pitchforks? But that's not correct. It's like, my bank will argue with you. No, you keep telling them, look, you don't experiment and say, here's my traditional fork. I'm going to base it on candle bodies on whim. The default is wick to wick. If you're working with me, if you're learning from me, the default is wick to wick. The only time you change it is when you have a pitchfork full of data and the traditional fork isn't giving you the hits. First thing I do is I remove it off traditional. I make it a best fit. Move, swing high, swing low at where the median is. Hey, I miss it by 2 or 3 pips. You know where you've seen this a lot? If you've drawn a lot of pitchforks, anybody in here that's drawn hundreds and hundreds, watch this. I know you've seen this. Let me get my... if you haven't, then you really haven't drawn hundreds and hundreds of pitchforks. So in this configuration, we go from a swing high to a swing low. From the swing low, because it is the swing low, we do not expect price to come down anymore. So we expect price to go up from here. So this fork has to be pointing up. As a traditional, it's swing high, swing low, back to the previous swing low. So our pitchfork, if we look for the midpoint here first, and then we connect this low to it. Okay, and then we have parallels. And of course, we use the parallels first because that's how we draw it. We're not drawing it like we're Alan Andrews. So we grab our pitchfork tool. Jimmy Buffett, where are you? So, we go wick to wick, and we watch price. Yeah. And we go, well, geez, I can see something. See, you need to be able to see what's going on here as soon as you see that. You say, wait a second, it was short here, it overextended here. But in both cases, if the median came down some and the lower parallel came down some, you'd see perfect touches. Here's how you get the best fit. And what you discover here is that your pitchfork works really good off the candle close. You will see that a lot. So these were based on wicks, but this one, you can call it a best fit, or you can call it the candle close, whatever give it whatever name you want. You'll see that. Beta saying I've seen that many times. Yes. Well, how do I know if I should do that or not when I first draw the fork? So the bottom line is, you don't decide to do that. So for the admins, we're trying to keep newer traders all focused to an extent. Yes, jump on a trader. who's trying to tell you, while there's no data, meaning other than my swings, price hasn't come up and done anything yet, hasn't gone back and tagged the lower, it hasn't hit the median, hasn't packed the median, hasn't gone up to, there it is, real time. There's no reason that fork should be off wick. That fork back here should be on wick. Don't let the, well, Steve said sometimes. Yeah, Steve said if I see the data dictates that I would want to do that. There's no data here to dictate it. So they need to be drawing, newer traders setting up for, oh, here's my first traditional pitchfork. It needs to be on wicks. Okay, Perry. No, it has nothing to do with the DNA of the pairs. Yes, where do I enter the trade? Did I have... Oh, no, I didn't. Yes, exactly. So when you're doing the rolling Bollingers, if you're talking about, let's say, a pure 30-10 situation, the 10-minute wave does not have to retrace to 80 or 20 in order to take a buy into the sell. It's when the 5-minute wave is at an extreme, but the Bollinger serves as an extreme as well. Good question. So Clay will show you how to do that on Monday, and we'll give you the settings on Monday, and you're going to be really stoked when you see what you can do with Fast 33, Tab 29, lower level. You're going to be stoked. It brings a whole new dimension to... They're bringing that back on, by the way. I see commercials now for Twilight Zone. What's his name? Trying to think of the guy's name. Yeah, Peel. Exactly. Yeah, it's coming back. Same music. So you can look at a chart like this and just find all sorts of trend lines. Remember, you want your trend lines in your direction. So if you're going up, you want bottom trend lines. If you're coming down, you want top trend lines. So don't get them confused. And then trend lines in the indicator. Great. Bounces off the Bollinger, the 5-minute bouncing off the Bollinger. We'll declutter this a little, Clay. So when you get down to your 5-minute chart, let's not have, well, you won't have 1 minute on it, that's for sure. Not on TradingView. Telecharts, we used to be able to do that, but you can't do it with TradingView. Any questions in general? Any quick questions about anything that anybody has? Whoops, here's a big one. All right, I got a question. Hold on one second. I'm going to look at something here, over here on this other chart. I was looking at something I wanted to show, and I just want to see if I want to, looking at my clock, I really don't want to get into it, I don't think. So, hold on, just let me play with this a second. Bear with me, don't go anywhere. So there are a couple things to address the question. There are a couple things not in INS that we're looking at. One, I told you we're looking at multiple support and resistance lines, and maybe a way of defaulting a subset of them to be entry, stop, take profits, so those could quickly plot without having to change colors and stuff like that. But anyway, so the underlying INS, we have to be careful about what we package it with. We want it to be the all comprehensive, but we have to watch system resources. Fast 33 as an example, tab 29, but fast 33, huge load on system resources, and then if you have it on multiple charts and then multiple time frames, 15, 5, 1. We just got to be careful not to overload things to where we start crashing charts. But we have both Murray math lines and quarter theory, on the drawing board for INS. What is the correct way to draw a Fibbo line? Well, it depends on what you're using it for, but I don't know correct way. There's techniques. If you can eyeball it, if I want to go from this high to this low, I just make my horizontal line touch that top candle and come down. Now, a lot of people try and put it right on it and then drag it down and try and put it right on it. And you can do that if you prefer. I don't like doing that. I did that for several years as a newer trader. I'm more about, because sometimes that line gets hidden. You got other stuff on your chart. I'm about finding the top and then coming down. And very often I'll go and open this up. So let me get my you put your cursor on the candle, and you can make a determination as to the high-low close information, and then I can get a coordinate for it, and I can get a coordinate for this down here. And if I know that number, then as I go to put my Fibbo on the chart, I just move this. I'm watching the price on the right-hand side, so I move this and go, yeah, it's that wick was at 1243, so then I could drag down and, oh yeah, that wick down there, that was at blah 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 112.25. So now I've got it set perfectly wick to wick. Look at our 50% retracement. Boom. Yeah, you can use the magnetic tool. Blah. You're still drawing lines on the run though, and I don't like doing it. There's lots of reasons why I don't want to do that. Like I said, I used to do that, but And you got to be careful too. The magnetic tool isn't always magnetic to the right candle the way you'd like it to be. You draw enough pitchforks, you'll notice that. Now, whether you want the lines going across the page, whether you want the lines in the price, those are all options just in the format tool. And then once you get your magic Fibbo sheet, come on, let's donate. You can then put your cursor on it, right click, and go to template and select from various templates that you've created to give you different Fibonacci levels. And reverse compliance on the way down, boom, boom, 61.8. How does it serve as both support and resistance before we've even gotten down here and it knows where the 61.8 is? How do we have, reverse compliance before it knows where the 50% is? This one's pretty amazing. Support, resistance. Support, resistance. Because it's intelligent, not smart. Because time bends. And here, it looked into the future and saw this point here, so price comes up to that point and drops. That's why. No, intelligent, like ancient aliens told it where it was going because they could see both past and future. I said that for Michelle because I know she's a big ancient alien fan. Yeah. All right. So I did address that question. So yeah, quarter theory, we're looking at it, I don't want to get lost in it, but Murray math line, same thing. When you see Murray math line, sometimes they're so. What was your question, Michelle? Where? What about SNR? I'm not hating on it. I'm just saying. Well, we already covered that a little. You look for things, the same compliance, off can. It's like sometimes I think there's a frequency transmission and your support and resistance subsystem gets just and it's off by 2 pips, and you'll notice all the lines just missed by 2 pips. We'll see that happen with harmonic targets sometimes. And I go back and check the 1362 cross, and it's like, and that's why we reference things when we see it 100% on, when it's wick to wick, and we see these bounces on the wicks. We call them, compliant. That's not the right word. It's in synchronicity with that particular support and resistance system. But I just use the word compliant. And there's no rhyme or reason as to why which subsystem is on one day and it's not off. It's not on another day. Anyway. So we're going to have some new classes added over the next couple weeks. We've got some people interested in helping out as coaches and educators who have been with me long enough to know some of the stuff we're doing. And we're going to start setting up some additional sessions. we got to meet and see what times work best for them. And, you know, we're going to have many, many more sessions per week of Disruptive Traders TV. Yeah, we'll probably have some that are off time. Early in the morning, so it's late night. Hell, we used to do 6 a.m. for the Aussies so they could hang around at night. Late night for them. So our goal is to have, 3 levels of stuff. So beginner, intermediate, advanced, things like scans. We'll probably just, beginner to right to advanced, because there's just only so much stretching we can do on, and don't need to stretch it out, but there's only so much we can cover on things like harmonic scans. We're going to have a harmonic scan course, and we'll get back to beginner Charlie Delta. We'll get back to just setting up the forks first, draw them, and then we'll we'll have training on harmonic wave convergence. And so we'll divide it all up in a beginner, intermediate, and advanced, and you just stay where you need to stay until you master it. And it's not as active as it should, but we circle back. I look at the to-do list. So we're going to come up with some, not only on where you're sourced from or where you've been, but where you are in terms of not just number of trades, but where you are, beginner, intermediate, advanced. So we can have the coaches that work the group can have a little bit more understanding of your background. This is a beginner fork trader. Oh, kid gloves. This is an advanced fork trader. Learn to point your forks in the friggin' right direction. Rah, 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 rah. Bark at them. And so we could logically move people along. Because I know I've covered enough material over the last 3 years that I have people that are new to trading here, and I don't want to blow them out of the water because they think it's so complicated. Like, oh my God, I've got to learn all that. Well, the reality is, yeah. But, in terms of information overload, and likewise, I don't want to see attendance drop off because I'm teaching this is how you draw a pitchfork, and the advanced traders are bored to death. So, we want to have a little bit better division of the classes. So we'll work on that. We got a few other things we're waiting on in that realm. And then once we hear on that stuff, then we're going to go to work on all of that. So it should be good stuff. All right, with that, I'm going to shut it down. It is Wednesday, which means what? Somewhere between tomorrow morning and early Saturday morning, you will have another edition of Trader's Mindset Mastery to lull you into your weekend. Woo! We'll do the Clay Way on Monday with Fast 33. And we be marching forward. I love that you guys come. We got a pretty good core group. I didn't put any ads out today, so I didn't peak attendance, but I got a good. It's a high percentage. And look, guys, don't just always come here. Blind. We have a big group, and we could keep a running list. We have a handful of very active coaches, and then a mid-range group. But the ones that are very active, talk to me frequently, and so don't be hesitant to just make a post in the group that says, can we spend a little time on this? Can we spend a little time on that? Because I'm market driven. I want to give what you guys need, and I'm not going to be an individual tutor, so I can't take it to that level. But the group is there for that. A lot of your questions can be asked in the group, And when they can't be answered in the group, that's when we bring them to Disruptive Traders TV. Yeah, live trading rooms. So with that, I will remind you that life can be short and sometimes even shorter than that. And so remember to think of those people you care and love and let them know you care and love them. I love you guys for being here. I love you guys for your commitment. I love you guys for your support. And we're gonna just continue to move some stuff, break some barriers for 2019. I'm getting some really, really, really huge emails here and Facebook messages the last couple of months about breakthroughs for a lot of traders, and it's very exciting to see that. And I think 2019 we're going to see a whole ton of that. So, yeah. So I'll see you guys Monday here and in Facebook in the meantime, and I'll be in your ears sometime Thursday to Saturday. And of course, anything come up, just catch me in Facebook land. With that, y'all have a great weekend.